Welcome to TradeTheNBI.com. This is John. This report is for the 9th. I'd like to say the market is difficult, but at this particular point, not so much, though intraday the ranges are still fairly decent. Now, we've been looking at a series of positive extremes here, going back from, well, let's look at it from this first one that took place, and the lows right there, around 74. It's likely going to be the ultimate retrace when we're done with all of this quick pump. We're already starting to see some fade off of short-term buyers in it now that we're getting into some excess, and particularly if we get towards that 15 here on the 13 at least on the D Omega, which is the white line, we could be looking at a pretty extended situation. We're already seeing some of that momentum decline, which is why some of the intraday ranges are starting to grow just a little bit, and that would be more healthy if we actually did have a little bit of pullback. But again, those chasing yield have nowhere else to go, and they're sort of stuck. So the only way that's going to change is if the Fed decides to move from, its easing point to support the dollar and start pumping into gold and pull some of those funds in a different direction. Don't know that they're yet convinced to do that, because from a narrative standpoint, it looks good to still have the market rising. At least people's wealth is not being completely eroded, at least the top echelon, while so many people are still unemployed. And, with the protests and that, it'll be interesting to see how much of a bigger detriment that has on growth than, the ending of the COVID restrictions, because this is going to really put that into really a question mark, particularly in certain areas. Not so much broadly, but it has happened in the large cities that tend to make up significant portions, particularly where there's been significant damage, particularly in New York as well as in Chicago. And that, from an NQ standpoint, again, we're already past the highs, and of course the big news was, of course, that the S&P moved into positive territory for the year, which is still pretty extraordinary given the fact that we were already at pretty lofty levels in a correction that took place right as the pandemic crisis was beginning. Was normal, was actually healthy, but that rebound as soon as the Fed initially said that they were going to get involved, and we all know you don't fight the Fed. So will that cause the euro to start suffering? Well, if the euro is going to come back, we know where it's going to come back to. Right down here in the 109 range, we'll feel the positive extremes from the initial algo move that drove this up to where it was. None of this is about fundamentals. This is about the Treasury supporting the euro. Don't get any confusion. Anything good is happening in Europe, and whether or not oil. Some believe that oil's had its day, but we're just seeing a reset. The reality is, I think they're still seeking that 50 target. That's something I mentioned way back here when we first began this. I don't think any of that's changed at this particular point. We did get a little bit buyback off of the gold. Slight dip here that's been off of, it started at this DOC spread, kind of held on pretty decent with the reset. The problem was couldn't get enough support from those short-term buyers to hold it up there, and that's when we started to see the decay a little bit here. I don't think it's anything serious, because we know there's nowhere for it to go. So we started off with nice positive extremes and marked that line, of course, filled it all the way back in, and we went to exactly the 3183 algo fill, and then broke all the way back up, because when they create that pre-market high, bring it down, now they love to go right back to it, and then we eased off just fractionally from there. And once we start playing into that algo level, it wasn't complicated, because as we scroll across here, a little too far there, we just started to build and really pretty much maintain that, even though we had a pretty decent sell signal within this. The reset from the steel already came in, and when that orange dipped below, you knew this was accumulation going on right there. It was just a matter of waiting for the full-on trigger, which took place when we started popping up right there. Had the magenta move up towards it and then come back, but we started with positive shakeout at that particular point in the red, and boom, and that took us all the way back over and up into the new high range, all the way up into 32, 31 range. Of course, positive extremes from right in this mid-range, 32.18, and I would expect that we fill that back and go from there. So From a broader standpoint, I think we're still a little ways away from worrying about where economic things are, and more importantly, worrying about the Fed and its intentions when it's going to start to ease back. And if it does ease back, we would expect that it would be corresponding to some kind of economic activity and revival, and it's going to be a question as to whether or not the protests have delayed that, or have they also increased the spread. I remember how it was, couldn't go to church, couldn't do anything, but somehow it's okay to go out and huddle in tens of thousands to protest. No rhyme or reason to any of this, which makes it all the more confusing. Of course, every day you have new stories coming about how they've messed things up. You had the reversal of the Lancet study on the hydroxychloroquine, basically saying they made that one up. That got pulled. Now they're talking about the errors they made in the potency of people who are asymptomatic. And the list goes on. I mean, they've been retracting everything. I mean, that's assuming you ignored the articles that already had existed about wearing masks and the various health detriments that those produce. Different story in and of itself. Anyway, we don't need to get into that part of it, but nonetheless, these are all things that are in play at this particular point, and why we're going to continue to see the ranges. Because as the Fed backs off, we're going to come down, and then we see the algo point where they start to step back in, and that's when everyone else jumps right back in. And we just need to keep doing the same other thing. I mean, that's all we're doing. We just see it a lot earlier than everyone else. That's the beauty of it. As always, though, trade well, and if anything relevant pops up, I will let you know.